What's up, trading bros and sisters? Rise and grind. It is Wednesday, and there is a lot on this tape. We're talking Iran, gold, the chip sector, and some regulatory stuff that has got me genuinely heated.
Quick disclaimer before we dive in. Nothing we say on this show is financial advice. We're two guys talking markets, not telling you what to buy. Do your own research before you touch anything.
All right. Iran peace deal. Number 9. I have been here 8 times before, and I've called the reversal every single time. But I have to tell you, this one reads differently. Axios is reporting a one-page framework memo. Nuclear moratorium. Sanctions lifted. Frozen funds released. The Strait of Hormuz reopened for commercial traffic. Operation Epic Fury declared, concluded. Trump is pausing. Project Freedom. China is pressing from the other side of the table. 3 separate vectors closing at the same time. More structural detail than any of the previous 8 signals. I cannot dismiss this one the same way I dismiss the others.
I've read the memo. You're right that the detail is more specific than anything we've seen before. So let me give you the other side of that. Iran just created a permanent toll authority, not a temporary ceasefire administration. A government body with a legal mandate and a dedicated revenue stream built into it. You don't hire toll collectors if you're about to tear down the toll booth. 9 attacks on commercial ships since the ceasefire was declared. The gunfire did not stop when the talks began. Pete Hegseth confirmed publicly that the nuclear timeline did not move. 9 to 12 months to a weapon. Same number as before the entire bombing campaign. The bombs changed the optics. They did not change the physics.
So the deal has real terms on paper. But the infrastructure Iran is building on the ground says permanent, not winding down.
One more data point before I hand it back to you. During the European session this morning, the yen jumped 2% against the dollar. In 15 minutes. Gold up. Yen up. Oil dropping. 3 completely independent asset classes moving against the dollar simultaneously. That is not noise. That is a signal.
And that is exactly what is eating at me this morning. Gold closed at $4,688, up $120 in a single session, on the day the war supposedly ends. If smart money actually believed this deal, gold would be flat or lower. You do not buy insurance when you believe the fire is out. But they just put up $120 on Peace Day. 8 times at this rodeo. 8 peace headlines. 8 reversals. I called every single one. This deal has real terms. More structural detail than anything before it. But gold is not waving it off. Gold is screaming that this deal is priced and not believed. When the smartest money in the world buys insurance on Peace Day, that tells you more than any one-page document.
The currency markets are more honest than the headlines right now. Dollar at its lowest since the war started. That is the real headline, not the framework memo. When gold, yen, and oil are all voting against the dollar at the same time, that is not coincidence. The currency markets are pricing unresolved risk. That is the honest read right now.
Okay, let's move to the chip sector because Advanced Micro Devices, ticker AMD, just absolutely went off on earnings.
Advanced Micro's earnings beat was driven by data center numbers. The market came into that report nervous and left with conviction. But here is the number that tells the bigger story than any single earnings print. On May 5th, the SPY hit record low volume for the year. That exact same day, the chip index hit record high volume for the year. One session. Both records. Simultaneously. The index closed green because one sector carried the entire weight. That is not a broad market rally. That is a rally wearing a market costume.
Say that louder. One sector carrying the whole index on a day the rest of the market went ghost. That is a fragile rally.
And when the chip names take a break, which they will, there is nothing underneath this index to hold it up. The breadth is simply not there.
Advanced Micro ran nearly 9% from its post-earnings low. We are talking from around $341 all the way up to $371. Almost $30 recovered in 2 sessions. And NVIDIA, ticker NVDA, was red on the exact same day Advanced Micro was green. That is not a coincidence. That is rotation confirmed by actual earnings numbers, not just price action.
Intel, that's INTC, closed at 115. The hardware call is doing exactly what the model projected.
Micron, ticker MU, is sitting right at $650 resistance. Hit it. Got rejected. Hit it again. Got rejected again. Micron is sitting above a $700 billion market cap at that price level. When 650 breaks to the upside, and I mean when, not if, it breaks fast. But it has not broken yet, and that ceiling matters heading into the rest of the week.
Micron answered one question tonight. ARM Holdings, ticker ARM, answers a completely different one. They report after the bell. Micron proved that memory has real pricing power. Genuine scarcity driving the numbers. Architecture licensing is a royalty model. ARM gets paid per chip shipped, not per chip that is scarce. That is a fundamentally different business. If ARM beats tonight, the rally has breadth. Every layer of the stack is getting paid. If ARM comes in light, the move was supply chain only, not a true cycle story.
How do you trade those two outcomes differently?
An ARM beat means you want the chip sector ETF to broaden out. The whole space gets a runway. If ARM disappoints, you want data center names specifically, not the whole basket. Get surgical. Either outcome is useful information. That is what makes tonight a real test and not just a momentum trade.
Real quick on the Fed, and I want to be precise about this. There is no Fed meeting today. The last meeting was late April. The next one is June. That is Kevin Warsh's first meeting as chair. But if oil craters on this Iran deal, we are talking a drop from around $103 down toward the 90s. Consumer price index numbers start moving in his direction in a real way.
The setup for June just got more interesting if oil moves. Lower oil feeds into headline inflation and gives Warsh cover to act if he wants to. It does not guarantee a cut, but it changes the calculus significantly. And if the dollar keeps weakening while oil drops, that is an unusual combination. It suggests the market is pricing something more structural than a one-meeting rate adjustment.
Okay, the SEC story. And I'm going to be honest, this one is personal. The Securities and Exchange Commission is moving forward with changing earnings reporting from quarterly to semi-annual. Companies would only have to tell you their actual numbers twice a year instead of 4 times. This is the third guardrail removal. Pattern day trader rule. SEC funding cuts. And now, semi-annual earnings. 3 in a row. You know what I call a casino, with no security guard, no bet limits, and half the information available to players? Chapter 3. We are on Chapter 3 now.
Think of it as an honesty tax. You can only see the truth twice a year now. The gap between what companies report and what is actually happening doubles in duration. Institutional money has alternative data, supply chain contacts, satellite imagery, channel checks. They track that gap in real time regardless of reporting windows. Retail has the earnings report, and now you get half as many of them.
They have satellite images of parking lots. I have a quarterly report and a Reddit thread. And now they want to cut my quarterly report in half. The first 2 guardrail moves, pattern day trader rule, SEC funding, those were at least framed as helping retail somehow. This one you cannot spin. Semi-annual reporting removes information from the people who already have the least of it. There is no other way to read it.
Disney and Uber are both reporting this week. Travel and consumer names going into what might be the final days of this war. The question is, how much peace premium is already baked into those prices?
AppLovin and Snap also on deck. Quick mention. ADP jobs data dropped this morning. Solid number. Did not move the needle the way the Iran story is dominating today. Systems check. TB, you go first.
WaveTrader is holding 6 positions right now. Net positive on the cycle. Intel is the standout from around $82 to $115. That is a 40% move on the hardware call, doing exactly what the model projected.
TFT is sitting at 92% cash. 2 names on, Amazon ticker AMZN, and Dick's Sporting Goods, ticker DKS. System is watching, not playing right now. 92% cash versus 6 positions with a 40% runner. Same tape. 2 completely different reads. When TFT says wait, I have learned to wait.
2 systems built for different mandates. TFT holds for high conviction setups. Wave Trader stays positioned through the cycle. Both are doing exactly what they were designed to do.
Alright, here is what we are watching going into Thursday. First, ARM earnings tonight. Beat means every layer of the stack is getting paid, and the rally is real. Ms means this was a Micron story, not a cycle story. That is the single most important data point tonight. Second, Micron at 650. Watch whether that level holds as support into tomorrow or flips into resistance. That is the key technical ceiling for the entire chip move right now. Third, the dollar and gold. If gold holds above 4,600 and the dollar keeps dropping, the deal is not being believed. The money that matters is still buying insurance. That tells you more than any one-page document. Fourth, oil. A drop toward the 90s on real deal confirmation changes Warsh's June math. Oil staying above 100 tells you the tape is still nervous regardless of what the headlines say.
Watch tomorrow's PY volume profile. If volume comes back in broad across sectors, the costume comes off and the rally is real. If it is another record low day with the chip names carrying everything, that tells you exactly where we still are. Volume does not lie. Neither does the yen.
You know what I keep coming back to all morning? The market has been more honest than any headline this week. Gold told the truth while peace memos were dropping. Volume told the truth while the index was green. The tape does not lie, even when everybody else is trying to. Stay curious, stay skeptical, and keep your eyes on what the money is actually doing, not what anyone is saying about it. May your stops be tight and your conviction be tighter. See you on the other side, trading family.